All right. Now it is getting much more interesting, and this is one of the things that we've been waiting for a while. I did not finish segmenting this very well. All right, so we are getting much more, um, is it concentrated, for lack of a better word, into the market, the nature of the market, and then what we do or how we do what we do in the market. So what I taught us initially before now is one of the ways to pick trades inside the market. And as you can see, that is what I use. I showed us a trade in the last video of this, as you can see. As of then, I think it was somewhere around there. But as you can see now, price is moving beautifully towards our direction. Like it's simple. This is support. Price found support here. That was why price went up. Market came down. The support got broken. And now the support is what? The support is turning resistance. And when price got there, could I have sold immediately? Yes, I could have, but confirmation has given me a better bias. Why? Look at the volatility 75 index I was showing us earlier, where I said I could set my sell limit there, but I'll prefer to wait for confirmation. So can you see? I've actually deleted the object. Did I delete it or I hid it? Let me see. That's the previous one that was there before. Why does this trading view misviews I use? All right, so if you can remember, I marked, I think this is all. I marked this point as a resistance zone, right? I marked it out as a resistance zone. And I said I could just set my limit here and my stop loss right above here and take profit somewhere below here. Which when you check it on the 1 hour, as at when we recorded that last video, it looked as though the market was respecting the analysis. But as you can see, the market has violated it. So let's analyze this chart together. As a trader, what will I then be looking to do? So can you see that because I was waiting for confirmation now, first off, I was rescued from a potential loss, right? So that's why I often wait for confirmation. Now, let me take this off because I actually no longer need it. Same as this. So market has broken structure now. Let us follow structure. This is a low, a high, higher low, higher high. Of course, it said for no reason should the market come below here. We'll still talk about this now as we make progress. Market closed below. You can see retraced. Failed to create a lower low as it were. Now it has broken structure back to the upside. What does that mean? Market has said only one thing, like I taught us earlier. Now begin to look for buying opportunities. So how do I begin to look for buying opportunities? Like I told you, this is time to now mark out your zones, which is part of what I'll still teach us further inside this new phase that we are entering now. So remember, from when we were talking about, is it trend direction? I said the least time frame we ever go to, the least time frame we ever go to confirm trend direction is 4 hours. So this is the daily. The fact is that the daily actually still looks very bearish. I mean, very, very bearish. And the daily has gotten towards a very interesting point, which is what? This is where price found support initially. And then now price has gotten there. Who knows? Price may. I did not say will. Price may find resistance there to continue to the downside. So first off is that we are confirming the trend, which is what? A bearish market. Now market has gotten there. There are so many other things I would love to teach us, but let's just stick to the 4 hours for now. 4 hours has broken structure to the upside. Remember what I taught us. This is a low now. a low, a high, higher low, higher high, right? So there are two ways from what I taught us. I would wait for the market to retrace deep to form the higher low and follow it back up, or this same price, this same zone where price found resistance. Remember, I taught us that where price found resistance, now that price has broken above it impulsively, the truth is that price may, I did not say will, may find support over that region. So what do? I'll mark out that zone, just like I did earlier. But this time around, the zone has been broken to the upside. So what will I be expecting? Remember, it is one of two things. The price will either come here, fact, and continue back up. That's the same thing it did with volatility 10. Let's check it from the 4 hours standpoint. This is 4 hour. This trading view always misbehaving. We can see price broke it, came here. This was where I took the first entry. Now it's going back down. Can you see? Almost immediately. And we could actually see situations that the markets will actually come this deep before it begins to go down. That's why we wait for what? Confirmation. Is it making sense? So let's go back to VIX 75, where we're coming from. Why is that zone no longer there? Is it my network? It is well. So let's mark it out again. So I mark it out. I mark it out. And then what will I be expecting? The price can either do this and we continue to the upside, or price does this, comes this deep, and we do what? We continue to the upside. But most importantly, both in this place and in this place, what will I wait for? Confirmation. Having established that, let us move back to the focus for this particular session, which is introduction to the strategy I trade. Like, is it different from what I've taught you? No, but this adds more confluence to it. So there are some people we call smart money. It is often called smart money concepts. When you check Google, I'm so sure you would see it. Can you see smart money concepts? It's a trading strategy that involves analyzing the actions of large institutional investors to predict market trend. The goal is to use this information to make more predictable trades. Smart money is the capital controlled by professional investors and financial institutions, blah, 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 blah. The idea is that by observing the trading pattern of smart money, retail traders can anticipate market trend and make better trading decisions. Smart money traders focus on market structure, liquidity, and order flow. Retail traders often use technical indicators like moving average or trend. And you can go on and on and on. So long story short, as far as this market is concerned, there are some set of people that we call smart money. Now, there are different school of thoughts. Some people believe that smart money exists. Some people believe that smart money don't exist. But the fact is that this is where I choose to stand. Whether smart money exists or not, the logic in trading, that is what we call logic, reason. Like we said during candlestick patterns, you see, this market is often, at the end of the day, controlled by buying and selling pressure, not of retail traders, of institutional traders, not we. I believe I'm making sense. I'm saying the market is controlled by, if we are in a situation, take for example, okay, let us still use this. You can see that when price got to this resistance, initially, let's check the 15 minutes chart or something. Okay, initially the market showed signs. 15 minutes chart is not showing it. Let's check 5 minutes. All right, great. So can you see that from 5 minutes, the market looked as though it was going to sell. And even look at 5 minutes, we had a 5 minute engulfing candle. So what that means is that there were people willing to, the fact that you see these sell candles here means that there were people selling the market here. But the reason why the market could not go further at the end of the day is because the buying pressure at this region was much more than the selling pressure. So what I'm trying to say is that it is buying and selling pressure as it were that moves the markets, but not my own and your own. No, there are some guys called the big banks. These are people that have trading accounts. Imagine, I'm saying the forex market, they say it has a flow of $7 trillion daily, isn't it? How much you get for accounts? How much I get? $10K, $50K, $100K. That's so little. According to what I heard, which I believe is true, to move the market by one pip, you need $1 million. Just, is it one pip or pipette? I can't even remember. So what I'm trying to say to us is that there are people whose force controls the market. And this kind of people, when they trade, there is a way they trade. There is a pattern it looks as if they follow. Am I making sense to us, guys? So it is that pattern we now want to take observation of and then trade after it. So that is why it is called smart money concepts. That there are, I hope you know that there are traders in the bank, like they lose money the way we lose money. In the bank, I'm saying Nigerian banking, I know of a man that used to be a trader for Access Bank, Nigeria, in Lagos, their headquarters. So I'm saying this market is a market that all of us are playing in. The same way you chop loss today, they too in the bank, they will chop loss. And the same way some days your trade will hit TP, they too their trade will hit TP. But the people that control this market majorly, they are not even found in the Nigerian markets. No, they are not. They are not found in the Nigerian markets. That's the truth. They are found where? Mostly in New York, in Asia, where else again? In London. Those are the three trading hub. Let's just check to confirm. The three largest trading forex trading, stop it, trading regions in the world. Let's check. Can you see? Asia, Europe, North America, which is Tokyo, London, and New York session. That is where the big guys are. And what we are saying is that when these guys are ready to trade, you will see their footprint. These guys that we are talking about, good. You see long candles like this. They are the ones behind them. Long candles like this. Like this. This one, can you see? Pa, pa, pa. Now them. Pa, pa. Now them. Now them. All this big candle. Now them, they print them. When you are seeing tiny candles like this one, trust me, this is most likely me and you struggling in the markets when mostly these guys have closed. If you can remember from the beginning, we spoke about trading zones. So there are times that these guys are in office. Once they close, you realize that the market will just begin to drag and do anyhow. But once they open markets by 8 a.m. their own time, forget. You begin to see the pump inside the market. So the fact is that there is a school of thoughts that believe that these guys sometimes manipulate the market, in the sense that when they want to buy, they deceive people to sell. Because this is a market whereby if somebody is buying, somebody must be selling before the person buying can make money. You don't get. I am a bank. If I want to make money in Forex off Nigerians, off anybody in any country, fact is that they must be doing opposite of what I'm doing. Because that's the way we make money now. All of us can be buying. If all of us are buying, then who is selling to us? Is it making sense? So the idea behind smart money is that they say they believe that there's a school of thoughts where they look at regions, where they believe that retail traders should want to buy. What they will now do in that kind of a region is that they will deceive retail traders to buy, then they will sell. And since they have capital that is large, they control the market direction. So at the end of the day, they end up making what? They end up making more profits than us. I believe it's making. So the fact is that there are ways these guys trade. There are footprints that you can see of their trading, that you can say that, oh, when I see this, this is smart money. And when I see this, I can do this, definitely this should happen. So take, for example, they were the one that formulated for us this checklist, because there's a checklist with which we used to trade, which is number one. Of course, the trend is always your friend. Then there's a range. Let's write that down again. So there's a trend or market structure. I just want to refer to these trades again so that you can understand. Because as a trader, when you start entering the market, there will be that deceit, that pressure to want to go against the trend. And it's a lie. You always end up in trouble. So this is a market. As you can see, initially I was looking to sell. Why? Because the market was selling. Now the market has changed to buy. I've taught you market reversal. What am I looking for now? Market reversal to join the buy. That's it. When you look at this other one that is currently selling, although on the group, for those on the group, you realize I've adjusted the TP to 1:3, which is where this line is. And I told them, if you don't want to adjust your TP there, at least put your TP there. Wait, oh, I think this guy must have done 1:3 already. I think that's 165, 123. Oh, beautiful. 1:3 is bad. So drag your stop loss to break even, because I'm just feeling that the market may end up not getting to our 1:5. It may, but I'm just feeling it may not get there any more or any longer. So it doesn't make sense that, take for example, if you are risking $100 on this trade, with where price has gotten to, you have a $300 profit already. So it doesn't make sense that because you're now waiting for it to get to 500, market now goes back and take you out on a loss, right? But as aside, where I'm going to is that, guys, I'm selling in this market because the market is selling. No, good. This is the 4-hour. 4-hour is currently selling. I waited for it to retrace. Now I'm following it to go and create the lower low. Shikena. Let's go back to where we're coming from. So trend. The trend is your friend. You want to know how to always identify the trend. Then there's what we call a trading range, meaning that the highest point of invalidation. So take, for example, having sold here, I'm sure you saw what, I think I've deleted it. So now I know why the market is buying here, because when you look at this market very well, we'll still talk further into this. That's a low. This is a high, higher low, higher high. You can see that all this place, market did not go above that high. So market came to create higher low. Now it has gone to create higher high. Simple market structure. So that's how you identify your trend, your range. Then there's what we call liquidity. In this context now, don't worry, with time as you grow, you will understand. But this is the liquidity. What is liquidity? You just follow. So that's liquidity. Without liquidity, the market goes nowhere. Trading range, premium and discount. Liquidity. Oh, range comes before liquidity, please. Then trading range, premium and discounts. Liquidity. Types of liquidity. Static, dynamic, internal, external. Banks, POI, mitigation theory. All these things may look bulky. So let me write them out again. So market or structure, we talk about the range, we talk about Fibonacci, which is what gives birth to premium and discount. We talk about liquidity. We talk about then the banks or the smart money, either ways. And that's where you also find your entry. So bank stroke entry. That is it, guys. This is the checklist. So every day when you wake up, the first thing you want to identify is your trend. When you identify your trend, you know your trading range, look for liquidity, look for where you enter, you are good. Like you are very, 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 very good. So this video is just to introduce us to it. So who are smart money? Smart money are people that when they want to buy, they sell. And then when they want to sell, they buy. This is why buying or trading support and resistance anyhow without confirmation can be dicey. That is why I always wait for confirmation. So let me make it clearer for you. And what I'm trying to say is that take a look at it. Let me explain it again so you can get it further, but with speed. I'm saying that if I want to buy this market, you can see that this market has moved from here, from this region here to this region here. And fact is, anybody who bought here and put his TP here, the person has made profits depending on your lot size and your account balance. The person has made profits. But I'm telling you that inside this market, trust me, whenever you make profit, someone has lost. That's the fact. Because when you are buying, someone is selling to you. And the person that sells to you here, of course, you can't see the person because that's one of the job broker does. They pick up orders from many of their customers around the world, and then they pair people within split seconds with technology. Is it making sense? But fact is that for myself who bought here, someone sold to me there. And the person also sold with the expectation that price will actually go down. So the person's expectation is that me, I will make a loss. My own expectation is also that he will make a loss. By the end of the day, only one person will make profits. And that is what smart money does. Because they have the money, they can move the markets. So the ideology behind them is that when they want to buy, they need sellers. So the thought process is that they will deceive people to think the market wants to sell. So when there are enough sellers, then they buy. And then when they want to buy, take note of what I'm saying. Now when they now want to sell, they engineer price. That's the terminology we often use, price engineering. So they engineer price in a way that you will think that price wants to do what price wants to buy. This is when they want to sell. So retail traders will be pumping in the buy orders. Once they do, then the market sell. And then once in a while, the market can just go in the way of the retail trader. So this market is wide, W-I-D-E, and then wild, W-I-L-D, that you need to understand how the market works so that you can make money. So meaning that if there are people that there is a way they engineer the market to move in certain ways, what we want to learn is how to trade like those people. So the fact is that when those guys are trading, they leave traces on the charts. Traces that if you do this and do this and do this, you might be able to join them when they are going back up or when they are going down. So basically, that is what this strategy exists for. Let me write that down once again. That the idea behind smart money is that when they want to buy, they deceive or engineer price to sell. Do you get it? And when they want to sell, they engineer price to buy, so people can buy and then they sell. Oh, that was fast. And yet they engineer price to sell, so people can sell, then they buy. So let me give you a typical representation of this on the charts. This simple thing that I just told you is why I wait for confirmation. Because Everything I've taught you in the past video, they work. But they also know that, for example, around an area of support, let me look for a very good place. All right, so this is an area of support. Yeah, right, great. Around this area of support now, you can see price touched it the first time, the second time, the third time, fourth, and even fifth. And the market moved well. Market moved. Good. Look at another example. Yeah. This is another area we can call area of support. Price, excuse me, price bounced here the first time, the second time, and then also almost the third time, and then price moved up. So in this place, the smart money move here. And what do I mean? I'm still trying to explain the meaning of this statement to you. Remember, I said that when they want to buy, they will engineer price to sell. You know that in support and resistance, we've learned that, for example, like in this place, the support should hold. And once the support gets broken, there's every probability that that support can now do what? Turn resistance. And people will want to do what? People will want to sell from there. Follow me. So what these guys do, remember, for them to buy, someone must be selling. And for them to sell, someone must be buying. So what do? What they do is that, remember, this is a support. Price has bounced off it once, second time. This third time, can you see that price or market has closed below that support very significantly? Ideally, from what I've taught you, even me myself, what would I have been looking to do? To sell from here. Can you see why I wait for confirmation? If you look at it very well, now, if you wanted to sell from here, can you see that there's no confirmation to sell? There's no candlestick selling signal that I should sell. So what these guys did is that they know that there are some people that don't wait for confirmation, that don't even know what confirmation is. So those people are already in this market for a sell. And then what will smart money do? Smart money will buy. That's how they work. Simply how they work. And then they've made profits. This person is in loss because of broken structure. You think they want to continue to sell, but actually what they actually have in mind to do is to buy. And then the same scenario applies when they want to sell too. So let me look for, should we hide this or delete it? Can just reduce this as actually. Good. Cool. YouTube. Come here. All right, beautiful. I'm looking for a very good place. All right, awesome. So take a look at this region. Look at how that place stacked up as a resistance. It was resisting price massively. 1, 2, multiple times, 3, 4. Now this is a resistance. Price came near it. When you look at this 1 hour, let's zoom in to see what is going on. This particular 1 hour. I hope you know that this week means that price went this high, but eventually came down. And look at the way this one closed above it. Majority of people will see this as a breakout. In fact, for you who have learned trading before now, this is a breakout to you. And what will you be waiting for? You'll be waiting for the test, isn't it? Maybe your stop loss here. So you can do what? So you can take price higher. But can you see what happens? Smart money know that there are people waiting for this breakout. So what did they do? They deceive people. Now, for someone like me who often waits for confirmation, and you now see that we have that 3 inside out candlestick pattern. The candlestick pattern forms. Of course, me, I would have waited for retracement and I wouldn't have been filled. But for whoever entered immediately, as you can see, is in profits. Is it making sense? So to sell, what did smart money did? They first buy. So that is why you see people too. So for someone who was not waiting for breakout and retest, the person actually wanted to sell. The person had a sell limit here. Stop loss has most likely we've been taught, right above this eye, and then you hear people say things like, my broker is manipulating me. They took me out. They now sold. The same thing happens here too. Where's it? There are so many examples on the chart, but I just don't want us to limit it to this. Look at this one too. First tap, second tap, they would have had their entry there, maybe their stop loss below this way. They will now say, shit, man, I knew this market was going to buy. But look at what has happened. Now it has taken my stop loss and now it has bought. God punish these brokers. They're just manipulating us anyhow. No, it's not the broker. There are some set of people called smart money. They are the one. Now, there are some people, they don't believe that smart money exists. They believe that the market is run by an algorithm. Either ways, algorithm or smart money, Coco is understand the logic that drives the market. And then that way you can use to make trading decisions. So I just want to use this chapter to introduce smart money to us. That there are some guys, there is a way they look at the chart. It is that way you also want to learn to look at the charts. They have a checklist that when you see this, see this, see this, and see this, then you can do this. So that will be all. We're rounding up already, and then market network, MTN, decided to show him that they have power more than I do, which is true. So this is just an introductory video into this strategy. Trust me, without this strategy or not, in quotes, what I showed you in previous video is enough to make money every day. Coco is just that with this, you can now add more context to what you are doing on the chart. That's all. That's all. What I will still teach further, market structure, I've taught it. Bank entry, I've taught everything. But just to make more sense, right? So with time, everything will make sense, and then I look forward to see you on the other side. Cheers.